a bar volume study with the use or integration of structure. This is fairly basic, but we need to make sure that the fundamentals have been covered. No stone is unturned. So the bar volume interaction with structure is important. Bars and volume is one skill and majorly complex in itself. And structure is another key skill, as you know from session 1. But now we're going to combine them. So when we encounter structure in any form, especially support and resistance, as they are the most commonly used, the price and volume relationship is very important. We want to see an increase in the spread and volume, as this gives the break validity. And we also want to see the break to be around the halfway mark, 50%, the middle of the spread. So, for example, this is resistance. We want to see a break like so, where this action here over 50% of the spread is above the structure. This gives the break validity. If we have a bar with high volume that only manages to just close above resistance like so, or below support, it's suspect. Why? Because with all that effort, why can't we just knife through an area of structure? Now, of course, this does occur in the market, but is far from ideal. Let's go through this chart. Here we have a trend channel. What do we note at bar A? Volume is increased. We have the wide spread that closes firm. So this we would consider a clean break. It's perfect. Then B. What's at B? We have a wide spread. We do have a pop in volume, but it closes just above resistance. It's in the top 85% of the bar here. And we want to see more than 50%. We'd like to see a close here. So this is far from perfect. And we would highlight this as a poor break. It's not clean. Okay? And then C. Wide spread. A pop in volume relative to here. We close weak under support with over 50% of the spread under the structure. This is a beautiful break. We can see the difference between this break and this attempt to break. Although we get the volume and the spread on B, the close is not convincing. C is a clean break. So B is not a clean break, and look what happens thereafter. C is a clean break, and we continue down. Price never gets going from B. It doesn't take off. And this is a very good example of what a clean break isn't. Okay? D. We have an area of structure, wide spread, pop in volume, closes weak. A nice break. I'm sure most of you are aware of this, but it's important, like I said, that we're on the same page. It must be spoken about. E. Do we notice? Wide spread, huge surge in volume. What's good about this? We break 2 areas of structure with 60-70% of the bar over our areas of structure. Beautiful, beautiful break. This is a clean break. When we see this type of strength passing through 2 levels, we want to be buyers and look for longs. This leads to F. Now, huge surge in volume, as we can see. Wide spread that closes firm. And we break this level of resistance fairly well. But this red line is a 3-day high. And what happens when we approach this 3-day high? Supply enters. We can see that from the close. So supply is having an effect where it should do. So although we break this area cleanly, definitively, we cannot close above the 3-day high. Now, you need to apply logic here. What level do you think has more sway in the market? This resistance or a resistance that's held for 3 days? Well, of course, resistance that is held for 3 days is much more important than this level. So is it of no surprise that we come down from here, because this is a failed break? We can't even hold above this level. Then for the next 30 minutes, as this is a 10-minute time frame, there is no upside follow through. And then G. Look at G. We break 3-day high and this level of resistance with a increased little spike in volume and a weak close. And we close, and again, this is our main area, and we close a good 90% of our spread is under our area of structure, and probably 30-35% or a third of our bar under this level. So this is a very, very weak bar, as we can close 90% under. So this is why this move occurs. This tells us that supply is in the market and these highs have clearly been rejected. H. Good spike in volume. We break this level of support and this level of support, again with a wide spread, closing weak. Beautiful bar. This is a clean break that wipes out all of this buying here from E with higher volume. Therefore, odds favour lower prices. And then J. We get a clean break, closing extremely weak. Yes, it closes 30-40% under, not our 50% we would ideally like, but look how hard we're coming down. Odds favour some kind of downside follow through. I mean, this is the US close, and there are many types of traders that are active which produces this high volume. But sellers clearly won the battle, managed to close it under the US session low here. So this bar is significant and is a valid break. It's important to recognise the subtleties like B and F. Most traders are not aware of this phenomenon. We need to be closing over 50% of the spread if we're passing through it to the upside, and over 50% to the downside. This gives our break validity. And this is the only interaction we need to know when passing through levels. Wide spread, good volume that closes 50%. Again, it gives validity to the break. Now we are going to study volume approaching structure. We will study price approaching support and resistance. And we will study price approaching the demand line and supply lines in our channels. What to look for and how to analyze and how to formulate setups around session 7 or 8. But we know a lot already though, through our price action understanding of buying of good quality or poor quality, ease of movement, etc. If we're in a trading range and we come down like this on our first attempt, we rally it back up, then we come down like this on our third attempt, and then we rally back up, then we come down like this with very narrow spreads, and we can see volume decline, and we start to round under. We know that odds favour this will hold. Why? Because this is selling of poor quality. We're not coming down hard like we did here or here. So we know already we're beginning to be able to build the picture of strength or weakness. The data we can extract using price, the bar analysis and volume is phenomenal. There is no other word I can use. And after 10-11 years of trading, I have not come across anything remotely, not even in the same ballpark, that is as effective as this simple relationship for extracting data or insights from the market. All other indicators, MACDs, your RSI, stochastics, are a derivative of price and volume. Therefore, they lag. We read the market bar by bar as it unfolds live. And it is extremely powerful. It is the most useful tool we have in trading. And to become competent with bar volume reading will require a lot of practice. And I understand it may appear daunting, somewhat overwhelming. But the secret is to create a purposeful practice regime. 20 to 30 minutes a day is enough. Certainly longer than 90 minutes, especially in the beginning. It requires a great deal of concentration. But again, stick with it. And eventually the process will become muscle memory and almost instinctive. Like I can read here, come down, come oversold, bounce. We see demand come in. We come in, we hold sideways. We come down, much less volume. Odds favour, this will hold. We come down again. What do we know? Price clusters. Demand comes in earlier. We want to be buyers. As we come up, good quality trend with stair stepping. We break through this area with good buying. Then what happens? We get some shortening of the thrust. We come to support. We come down, we break. Weak close, shortening of the thrust, good selling. We rejected the highs. We want to be sellers. And price comes down. So this will all come. It will flow with you. You won't have to think about it because it's the skill. And you will know how to read this through time and adhere a little practice and effort. And you will be rewarded. Good. This concludes our session for today. I can see there aren't any questions. I do apologise, we have overrun again. I do think there is some, yes, there are some suggested assignments. Again, you don't have to, but I would advise that you do the assignments so I can go through your work and make sure, try and get inside your mind and make sure that you're adhering and applying the principles and concepts correctly. So if you can find the market in a trading range and apply the bar by bar analysis with volume, minimum 20 bars, say 30, 40 is ideal. Like I said, you just want to analyze the bars, analyze the rallies, what happens where at the structure, we're at resistance, what happens when we're at support here, and analyze the reactions, etc. And then find the market at a turning point and apply bar by bar analysis with volume. So, say we're in a downtrend. We have shortening of a thrust, clustering the closes, and then we have this sideways action here. And then we rally up. I would like you to analyze the turning point using bar by bar analysis with volume. Okay, this is a very, very useful skill to develop. Turning points, as I said, you can catch new trends. And you're right at the danger point. Provide very good setups. In my own trading, for my own training and development, I've done this, couldn't hazard a guess, dozens and dozens and dozens and dozens and dozens of times. It's a form of my practice, a form of practice. And this is a market term. Okay. Find an example where price illustrates the lack of follow-through concept with a resolution. What do I mean? Well, say we have a down bar. Then we get no follow-through to the downside. And then we see price rally up, perhaps come down, rally up, and then we take off north. I'd like you just to analyse the lack of follow-through concept with a resolution. Excellent. This concludes today's session. I do know this can be quite taxing, the price bar volume relationship. We peel back a layer and we get very, very deep, very, very quickly. So well done for sticking through it. You've asked some excellent questions. If you need any further clarifications, feel free to send in an email. I know I'll answer them before our start of our next session. Thank you very much.